Okay, this is live. Welcome to the 6th edition of Fintech Germany Award. My name is Franz Kongbui. I'm an editor for the Börsenzeitung, and this is the open jury session. And amongst other things, I am here as a co-head of the jury of the Fintech Germany Award, together with my esteemed colleague Michael Mellinghoff, who will have the word now.
Yeah, thank you, Franz. A very warm welcome from my side to Fintech Germany Award 2021. We are very excited that now we can finally kick off the event part of a process that is already running for quite some time. My name is Michael Mellinghoff. My firm Techfluence is one of the co-initiators of Fintech Germany Award back in 2016, together with Frankfurt Main Finance and Börsenzeitung, of course. And 2 years ago, I was also asked to take over, together with Franz, the head or the co-head role of the jury and its management, which I'm very happy to do. My firm itself helps fintech founders to find investors, talent, clients, and so on. We're based in London. Today I'm calling in from Rome because it's nicer here in terms of COVID than in London for the moment. You might have noticed our logo has a pipe wrench in it. So I would like to answer the question that I always get: what the heck is the pipe wrench? So when we started in 2016, we also had a subtitle called Golden Garage. So on the evening, I found golden pipe wrenches in plastic on the tables. And I thought to myself, this is not right. From Frankfurt, you should get something solid and not a plastic wrench. And I said, well, maybe I can help here. And remember that I received a golden wrench from an entrepreneur from Frankfurt, and I offered to see whether we can get them. So today, the prize actually is a handover prize for the winners in form of such a pipe wrench, which has to do with innovation coming from Frankfurt, and also obviously in German there's a pun, den Gründer in die Zange nehmen. Yeah, and this is what is the motto of the day. So the jury will today ask some questions, obviously after your pitches, which I'm very happy that we will have 10 startups today, which the jury has selected. And there would be no open jury session if there were no sponsors. So thank you very much to our sponsors, which you see, I believe, like I do down here, the logos. Thanks a lot that you make this happen and support us since many years, partially, during difficult times as we are in at the moment. And now I hand back to Franz to explain a bit more.
Yeah, before we delve into the session, a few explanatory remarks. The open jury session is an opportunity for a select few startups to present themselves to the jury. In the last years, we've held this event at the Finanzplatztag of Börsenzeitung and WM-Gruppe. But as you all know, this is somewhat difficult in these challenging times. This is a first for us, a purely virtual event broadcast live on YouTube. It's going to be a wild ride. Please bear with us if there are any technical hiccups, but I don't think there will be. We have an important disclaimer. This session is in no way a preliminary decision or a semi-final or whatsoever, but obviously the jury has invited startups of interest. And this session is part of the jury work, but not the result of it. Having said that, before we start with the pitches, I would like to thank the jury for their invaluable work and their time screening nearly 200 startups. The jury is the centerpiece of the award, not the organizational committee, neither the sponsors, as invaluable as they are. It's the jury who decides who will get the Fintech Germany Award 2021 in the 8 categories. So let me introduce the jury to you and let's have a look at them. Okay, so we have a screen here with our jury members who are present today. I will have to look. In the top left corner, We have Marco, who is, technically speaking, not necessarily a jury member, but he's a valuable member of the organizational team for the jury process, and we are very grateful to have him. So, hello, Marco. And to his right, we have Franz von Metzler, who is the managing director of Metzler Asset Management and a great supporter of the Fintech Germany Award for years from Bankhaus Metzler. And next to him, yes, to his right, we have, André Wassmann. He's a member of the executive board and head of M&A financial advisory at Helbling Business Advisors. Hi. And in the top right corner, we have Heba Agib, Chief Executive Respond Accelerator of the BMW Stiftung oder BMW Stiftung Herbert Quandt. So, hello, Heba. And then I have got to look. I can see Henning Zander, Head of Startup Program at Areal Bank. And yes, he's waving there. And next to him is Alexandra Weck, our ambassador from the Fintech ladies. So, and to her right, from my point of view, Hubertus Feeth, Managing Director of Frankfurt Main Finance. And with this, I hand over to Michael, who will introduce the rest.
Yeah, the next one I can see, it's very small, but I believe it's Birte Sewing, who's joining us from Berlin, who's currently Managing Director, COO of FinLeap and multi-supervisory board member of various German fintechs. Next to her, I see Miriam Wolfhard, who is a very prominent serial founder in the German fintech scene, RatePay and Banksware. My God, here we have the ladies front. Next, we have Nina Siedler, I think. Yes, she's nodding. Also from Berlin, who is a lawyer with DWF. And then we have also serial entrepreneur and business angel with a focus on InsurTech, Merdat Pirosram, who also had an IPO at Neuer Markt Times, New Market Economy Times. I believe from Stuttgart we see Georgios Kargakis from Allianz. Welcome. From Frankfurt, we have the face of the German blockchain initiatives, Professor Doctor, I believe, Philipp Sander. Philipp, welcome. Great that you made it.
Welcome.
Christopher Schmitz, partner for financial services at EY, is waving back. Hi. And Dominik Schütz from our partner and sponsor, Stuttgart Financial. The award will be handed over, or the awards will be handed over in Stuttgart this year. And I think we have now all of them. Have we forgotten anybody?
Well, we can see 16. I don't know. Have we forgotten someone?
I think we forgot Sebastian Schäfer. So big welcome to the founding director of Tech Quartier in Frankfurt, Sebastian. You're the host of today, actually. Unfortunately not in Tech Quartier in Frankfurt, where we intended to be, but you're also hosting us digitally here. So your team is making this happen. Thank you for that. And please take the time to say a few words.
Only a little time. Thanks a lot. So on behalf of Tech Quartier, my colleagues in the studio, Pascal and Christian, a warm welcome from our side. It's an honor. It's a great pleasure that we are now looking forward to the pitches. It's an impressive lineup of startups, but not only startups. Actually, my jury colleagues, esteemed jury colleagues, wonderful to meet. Unfortunately, only virtually, but I hope in September we will have more time for real networking. So now, wish us great pitches and a lot of fun. Thanks.
So, before we start with the pitches, which is right immediately, here are the rules. The pitches are supposed to be 5 minutes long. There will be a hard cut after 5 minutes. Now, so that we have time for the Q&A session for questions from the jury, which should last 5 minutes maximum as well. And with this, I hand over to Michael, who will be leading through the startups. Thank you very much.
Yes, now it's time for the pitches. That's what we're all here for. And we will call the startups 5 minutes, as Franz explained. And we are going to start with Reimagine from Berlin, please. Julia, the stage is yours.
Thank you, Michael. Thank you, Franz. It's a pleasure to be with all of you here. I'm just like waiting to see like the screen actually with the presentation, right? There we go. So good afternoon, everyone. My name is Julia. I'm one of the co-founders and co-CEO of Reimagine, along with Sebastian, who's also here in the call and will be participating in the Q&A. And Reimagine is the financial platform of startups that really want to change the world. But why? In essence, the world has changed, but have banks and the financial industry really changed as well? So what we see is that society has clearly been demanding and giving us strong and tangible signs that through their acts, they want to see change. They're asking for more responsibility from companies, aiming for more purpose, along with profit making. We see that like millennials and the Generation Z are really like pushing for this kind of movement. But also like CEOs have waken up to this topic and are really require like more and more to like align strategies in their business to social environmental goals as well. And we also see that banks still largely fund oil and gas companies and other harmful industries, which is already like time for change. On top of that, we see that actually technology has been permeating our lives, but B2B banking has been lagging behind for quite some time. So a basic example is like looking at the startup community and seeing that only like 2% of them have been banking actually with neobanks. And that represents over $800 billion in like revenues for potential banks. But what we see actually happening is 96% of them are really like banking with the legacy banks, but they're like dissatisfied with their services. And like 46% of them are really like showing that they would like to potentially change even to a new bank. So is it all the change? No. Also, when it comes to funding, we see that this kind of like change has been also required within the financial like traditional markets. And alternative finance alone should be like really gaining a lot of traction in the coming years. You see that this has been going beyond like $8 billion by now. And really like revenue-based finance itself should reach over $40 billion by 2027 worldwide. So really like looking at these three different kind of like trends and pillars, we see that truly that is a huge potential of shaping up the new Silicon Valley Bank of the 21st century. One that is enabled by technology, but also driven by purpose. So with that, we're bringing like our like offer to really like the startup bank for good. And we have like three main pillars here. The first one is our intuitive banking for really like these fast growing teams. Our accounts, they offer team cards that can really be, you can like really like issue as many like team cards like this, physical or virtual as you want. You can have like multiple bands for different like payments, payment flows. And also a super innovative analytics dashboard that is really like built on top of like open banking and really bringing on like revenue channels and digital marketing channels so that you can have a better like financial management at hand. Also, we're like bringing more like funding that is like non-dilutive to the companies, right? So a very efficient data-driven process, a flexible repayment way to really adapt to the needs of the startups without dilution and additional guarantees. Third, but not least, we are like really bringing incentives for our customers to look at other dimensions of their business through special discounts that are according to the level of impact that they can actually generate. We bring them like a community to really like inspire them becoming more like impactful, and features to practically make their operation more sustainable. In essence, we are a bank that stands for purpose. And we are really like creating an exceptional engagement through this vision, co-creation with our customers in active advocacy, really bringing together many different communities of change into like this new kind of like financial platform. So Reimagine is actually arriving to be the startup like launchpad of like part of the tool stack that any startup like actually needs by really like leveraging on different kind of partners. So looking at the different accelerators, funds and intermediaries as like ecosystem partners, but also like leveraging on the halo effect that startups actually have. So I have like less than a minute, just highlighting what we like managed to accomplish. Whilst in stealth mode, we're like fully compliant on a regulatory perspective with the fronting bank license and e-money license as well. We have like secured like a very like relevant debt facility, and also done over like 2 million euros in financing so far with like over 30 companies in the portfolio. And on top of that, really looking at very good performance with 0 defaults so far. And also we managed to bring on board like an amazing team of industry experts that are really like helping us to leverage and speed up the whole development that we have done so far. So thank you very much. And I think that was my time. Happy to take any questions that you might have.
Yes, thank you very much. 5 minutes can be very short.
It is.
Now, questions from the jury. Please shoot.
I have a question. This is Franz Metzler from Metzler Bank. Can you elaborate a bit more on the financing model?
Sure. So essentially, we have been operating through the revenue-based finance model. So in essence, we give short-term loans for our clients that have to be repaid based on the revenue they have been generating. These payments occur on a weekly basis, meaning from like the beginning, they're already like repaying and reducing our risk exposure as well. But these payments, they can fluctuate according to the performance of the client. So meaning this can become like much more interesting for them than just having like fixed payments on a monthly or like quarterly basis.
I have a question.
I don't know if you want me to go into the underwriting process. Yeah.
Do you consider yourself as a bank or more like a provider that works together with different banks?
More of a bank than a provider. Right now, we are like an e-money licensed agent, so we are not properly a bank yet, but we will be like incorporating our own solutions from the beginning.
Mm-hmm.
Julia, you mentioned you mentioned you're purpose-driven. Can you highlight? It's good to see you here. Can you highlight what you think is in the core of your business in terms of purpose?
So essentially, what we want to do is really like question what financial incentives are used for. So that's why we want to use like discounts, special interest rates in a way that we like show that startups, they can really like look into other dimensions of their business and also have economic benefit at the end of the day. So we really want to empower them to continue growing with the right kind of innovation, technology, and funding. And meanwhile, really like giving them the right tools and the right platform to look at how they can become more sustainable and how they can become more impactful. So at the core, we really want to show that the more impactful you are, the best you are, not only for the world, but also for your own business.
One more question here.
Yeah.
George, hi. Do you have any customer feedback yet?
Yes, we do. We have quite a few. And I think the best feedback that we've had so far when it comes to the financing is like several clients of ours already going to the second or third financing. I think that when we're looking into like the bank accounts, we're launching them now in June. And a lot of what we see actually is like on the wait list, we've been doing like several surveys to understand why companies are joining us. And essentially, first of all, they're really like triggered by like this kind of vision of like, wow, there's a financial institution that is trying to do something good as well for the world. But like definitely like really understanding that there is a lot of like innovation and value in accessing also like financing on top of the innovative bank accounts and cards that we have at hand.
You mentioned community a few times. So what's your idea on how to form communities under your umbrella?
So we have like different steps in building community. I think the first one of them is really like making very clear through content what is it that we stand for, but also plugging into other networks and communities that abide by the same kind of values. So that was like the slide where we showed like several communities sort of like in the cloud, and these are like partners that we have at hand. But slowly what we see happening is also like not only engaging with like followers on social media, even though we're like B2B focused, but like mostly within our customers and really generating peer-to-peer content, events, and podcasts that really can also highlight them. And like this community, we see that not necessarily we will have like all the answers, but we really want to make them like really be exchanging and promoting this kind of platform for them to interact much more. And at the end of the day, it's like, what is it that you truly believe in? And that's what we see, that more and more customers are interested in being close to.
Who are your main competitors today and perhaps in 5 years?
So I would say that if you look at this slide where like 95% of the startups are still banking with legacy banks, I could say that Deutsche Bank, Commerzbank, Sparkasse, and so on, they're like our first kind of like competitors, right? So we see that there's like so much room for the digitalization of like B2B banking that it's very hard to say that I'm competing against Penta. And nevertheless, what we see is that like the way we're positioning ourselves is much more focused on like companies that are already structured. So like startups and like scale ups, but also like digital, somehow like SMEs that are like very different from what either like neobanks like Penta, Conto, Contes, etc. they have with like focusing more like freelancers and solo entrepreneurs, so on.
Are you focused on any particular industry or on any stage?
If I understood correctly, the question from like an industry perspective, not really. We do have a negative screening at the beginning to really like get rid of several like industries that are harmful. But then we work with everybody else, but we're focusing much more on digital business models. Maybe this is like the cut that is important to take into consideration. And the second part of the question was, sorry?
It was the stage of the company, so the size of
Perfect. Yeah, so these are companies that are already somehow like generating revenues, right? So we're looking at companies that have already passed the incorporation phase and can also like see a lot of like benefit by having access to non-dilutive funding already.
Okay, I think we need to stop here. Unfortunately, I'm sure there will be many more questions. Thank you, Julia.
Thank you for your time.
And now, thank you. There is for our audience on YouTube the opportunity to also ask questions. So Franz is screening them, and if there are any which haven't been asked yet and there's time left, then we'll look into those. And now I would like to call Stockpulse from Bonn, Stefan Nann, please. Stage is yours.
Will I see the slides on my screen, or how is it working?
You will be seeing them on your screen.
Okay, perfect. Yeah, I see. Okay, hi. I'm Stefan. I'm the CEO and co-founder of Stockpulse, and I have to reconnect to Internet Clicker. 1 second. Yeah, and we are a data analytics company specializing in emotional data intelligence. And we improve and support data-driven qualitative decision-making for a pretty large range of participants in the financial markets by collecting, analyzing, and connecting alternative data from worldwide social media sources with deep learning and artificial intelligence methodologies. And Stockpulse eventually provides unique information for mostly institutional investors, and that's namely the emotional value of asset allocation. And yeah, so we cover more than 2 million companies worldwide with the focus on stock market listed companies. But we also cover non-stock market listed companies, and we collect more than 3 million messages per day about these companies. And we have a history of more than 10 years for the whole database. We process about 20 terabytes per month from 60 million diversified sources, and 90% of what we cover is coming from social media. Yeah, okay, I just saw it because someone clicked Internet Clicker. Yeah, thanks for the note. Yeah, and 90% of the messages we collect is coming from social media. So that means 2.7 million messages comes from those sources, and the rest is traditional news. And how do we do that? Apply natural language processing to analyze these documents in 3 different languages, German and in Chinese. And we map those 2 million companies to different identifiers, ISIN codes, symbols, names, everything which is identifiable in financial markets. And we, very importantly, we connect these information across different data sources. And for that, we apply deep learning and artificial intelligence. And then eventually we derive valuable trading signals based on these data sets. And, yeah, for us, or we are convinced that social media changes the investment style because it's the crucial force for investment decisions driven by emotions. And that leads to what we actually phrase the term emotional data intelligence. It screens and processes alternative data sources from social media and converts it in comprehensible and customized solutions. And if you look at the chart, there is more than half of the population is using social media actively, and that will definitely grow. So that means the potential for emotional data intelligence will increase. And how does that actually work? So we have different examples. For example, the Europe Big Data Sentiment Index or the Deutschland Top Aktien Index, which are both fully feeded with our AI and an automatic selection of stocks which are behind these indices, and both have an high outperformance to their benchmarks. And for us, the landscape definitely changed last year during the lockdown when people started to talk massively on social media, especially on channels like Reddit. So we all remember probably the GameStop frenzy on Reddit, and GameStop is still one of the most discussed companies on Reddit. That's a chart from April 21, so from last month. And you have some other financial instruments on Reddit which are heavily discussed, which had a lot of price increases over the last few weeks. And yeah, so for us, it's clear that social media is the new sheriff in town. And we are here to provide the data sets to stay ahead of the markets. And all of that is not just theory anymore, because we serve some of the largest institutions in financial markets who work with our data already for years. And yeah, so that's it. And thank you very much. And Sven and I are here for your questions.
Wow.
Wonderful. Thank you, Stefan. What is the business, if I may start with a question, what is the business model that you're following?
I would say it's twofold. So we sell data. So most of our customers are from the quantitative hedge fund industry and from the stock exchanges, as you have seen, and regulatory business. And to them, we sell data. So they consume our, let's say, raw data or data in different states. And we also develop trading models and trading strategies, which has been issued by, for example, UBS or UniCredit, who issued products based on the data. But also in that case, what we do is we deliver data. So that's actually the business model. So we consider ourselves as a data provider. And yeah, so that's actually how you can say it.
What is your USP compared to other providers with the same business model?
The USP is definitely the data. So that's why we call it emotional data, because as I said, we cover 90% social media sources, and it's the kind of Reddit and Twitter messages, which are sometimes highly subjective and maybe speculative. But that differentiates us to other news providers. So there are quite some peers who do news analytics and scrape or crawl news and do some news trading strategies, but that's what's not our focus. So because we say the real value is in emotions and in the psychology of the stock market, and that's not in a traditional or in an official news, but that's in the typical social media post. And I think we got the greatest confirmation in the beginning of the year when GameStop was posted on the Reddit platform. So that's exactly what we do since 10 years, and what we are saying and what we saw or what we've seen since years, and that was just very big there.
what kind of USP has a company using you? Do you also provide data for risk scoring, for example, or is it just raw data that you have? Is it no personal data, or how can
the data, no personal data. Everything we have about users in social media is just a pseudonym. So we don't know anything about the user. It's only a data point. It's neutral. So, and yes, you can use it for risk management or risk scoring, because we also develop long short models or only short models, and we have some clients only using our short signals, and they just use it as a hedging strategy, for example.
Thank you.
So we have, I think, time for one more question. Is there anything on YouTube, Franz, that you could share?
Right now there are no questions on YouTube.
I'll have a question about your performance. Is that real performance because you put money behind your model, or is that a back-tested performance?
The charts I showed is so and so. So it's 8 years or 7 years back testing, but one index is running since more than 2 years in a real market or even real money environment. And during the real money environment, it outperforms the index by 2 times as much. So, and also the other indices are running in a real market condition since several years, and they show the same statistics that we have calculated in the backtesting.
Okay, thank you very much, Stefan. Great to see the progress, and yeah, please stay with us. Next one in line, we have the company called Nect from Hamburg. Benny, please. Stage is yours.
Hi. Just waiting for the slides. There are they. Hi. Yeah, I'm just going to present you our RoboIdent technology, which is a video ident 2.0 solution, how we call it. Maybe some words to myself. I'm one of the founders of Nect. My background is that I'm a software engineer. Before founding Nect, I've been worked more than 10 years for the insurance industry. This is a little bit about the background why most of our customers as of now are based in the insurance industry, but we already gained some customers in other industries as well. The identity verification is always a pain point for banks, insurances, telcos, and many other companies in different industries. Especially when it comes to remote identity verification, you have mainly 2 to 4 different options to choose from. The most painful, obviously, is the activation letter. So you have to wait like 3 days for a letter to get access into an app, like a TAN app. The other most prominent solution is video ident, which probably everybody knows it's not the best user experience. Most times you have to wait 20 minutes for a free service agent, and sometimes you get not a very friendly service agent and stuff like that. And EID is still not very broadly used. So what we sort of is like the optical verification of an identity is still the best option to choose from, because if you optically verify a document, you can essentially verify every document around the world. And with an EID, you can only verify the specific EID solution, like from Germany, for example. But the pain point is if human beings perform the checks. So what we sort of is like doing a video ident, but with AI instead of a service agent. And this looks a little bit like that. The first thing you do is like you record a video. That's a very important point. You record a video of your identity document, and then you record a selfie video. And that's essentially it. So the most important point here is that it's a video of your identity document. So with photo ident solutions like from the international competitors we have, you most of the times only do a picture of your ID card, which is very easy to fake. So with our solution, you record a video, which also makes us happen that we can verify the optical variable security features like you would do in physical presence. So if you get an identity document, you verify the holograms and stuff like that. The second step is to verify a selfie, where you have to say two randomly chosen words, which allows us to compare the face with the identity document. But on the other hand, you also can verify that it's a live person and not like a picture holding up or something like that. With the process takes like 1 minute on average. And what the machine can do is essentially everything you would do like in physical presence or with a video ident, except like non-visible security features like only in UV light or something like that. So we can compare the face, we can make sure that it's a live face, we can make sure that it's not a fraudulent document based on the optical variable security features and stuff like that. And we have also the opinion that we can make it even more secure than a human being check would be able to do, because we can enable the machine to see more than just the RGB picture, so to say. So on the left side, you see a fake document with holograms. And on the right side, you see an original document. It's very hard to see now, I guess. But the thing is, even the print quality of the holograms can be checked with the AI enabled. So we say it's even more secure than a human being checked. And that's also verified in different industries, right? There's artificial intelligence being better to detect cancer than a well-trained medicine. So why not in this case, right? That's not only great technology. We have 4.9 out of 5 stars in the App Store. And our customers save 75% of the costs while gaining 25% more users. Some of our customers, as I said, many in the insurance industry, but we also have, for example, the German government with the Bundesagentur für Arbeit and a lot of public health insurance. We started in 2016 with the idea. In 2020, we grew by 1,000%, and now the next plan is to go international. So thanks a lot, and I hope you have a lot of questions.
Yeah, thank you very much. Over to the jury.
I have a question. Sorry. Go ahead.
Sorry. What's the revenue model? How do you generate revenue? Is it a monthly subscription fee with the institutional clients, or how do you do it?
Yeah, so the main business model is transaction fees. So we get paid per successful verified identity, and most of the time we work with commitments. So if you commit, like we take 1,000 idents a month, you get a certain amount of discount. But the main revenue model is based on transactions.
Okay, thank you.
What makes your solution more performing and secure compared to getting the data from the ID card using the NFC interface of your mobile?
So I had a hard time to understand the question, but I think you wanted to ask if it's more secure to get the data from the NFC chip.
Exactly.
So yeah, basically, obviously, it's more secure to get the data from the physical chip on the identity card. So we don't say that the optical verification of a document is more secure than the physical electronic verification of a document. But on the other hand, you also have like social attacks, right? The EID is just secured by a six-digit PIN. So if you think about, like, most people would choose their birth date or the birth date of her kids or her wife or whatever. So I don't think it's like the perfect solution to have the EID with the physical chip, but obviously it's a very secure solution.
Last time I talked to your company, the NECT technology couldn't be used in the KYC process. Is there any progress on that? Or, because that's like the main use case for banks and insurance companies, I would say.
So it's not the main use case, to be honest. The main use case is to replace the activation letter. Because the activation letter is what the most traffic is behind. Because just think about the Deutsche Bank 10 app, for example. The Deutsche Bank 10 app is used like once a day or whatever, and you forgot your passport, you get a new device and whatever. But the onboarding for a bank account is, as of now, not allowed with the automatic video ident solution. But just in April, the BSI released additional criteria for automatic video ident solutions. And we have high hopes that within 2021, there will be a regulation that allows a solution like ours to be used by banks to open up bank accounts. But that's only in Germany, right? In the rest of Europe, you already have solutions, automatic video ident solutions, to be allowed to be used to open up bank accounts.
I have one more question regarding potential competition. So if you look at, for example, WebID or ID Now, I mean, they don't do it with a video-based style, but they do it differently. So there's still this agent sitting there. I mean, but they have probably the advantage that they are there since a long time and have already a lot of customers. So imagine they would also start using videos to do the identification. How would you cope with this? Why would you think you could move on better than them?
So as of now, our app is already the most downloaded app in Germany when it comes to identity verification apps. So we already have a lot of data and stuff like that. So last year we did roughly 3 million identity verifications. So it's not that it's only a small that they are ahead of us as of now, I would say. Okay. And it's AI. So AI always need a lot of data and time to be trained. So I don't really fear the competition in that regard. I even think that with the technical background of AI, this can be the first time that a solution like ours can be the one leader, while video ident is more at certain time of like a commodity, right? So it's like you have many video ident providers, and with the technical background of AI, it can become one market leader in this space.
Thank you.
Another question from my side. Nothing? Okay.
Okay, last question.
So, last question. You mentioned also internationalization. How long does it take to train a model for a new situation? I mean, it's not all standardized. How long does it take for you to integrate a new country?
So as of now, we already support 140 different countries for the identity documents. And for the language, we support nearly all European languages. In general, it takes us roughly 4 to 8 weeks as of now to train a new document model or to train a new language model. But as of now, we already support nearly all countries from the European Union and many more countries around, because, for example, for the public health insurers and for the Bundesagentur für Arbeit, we needed to support more documents than just the German identity document.
Okay, thanks.
Okay, we need to make a cut here. Thank you so much, Benny.
But if I may interrupt before we go to the next point, there is a question that came up on YouTube for Stockpulse. So I would suggest that maybe Stockpulse will have a look at our YouTube screen and answer the question there so that we can go on here. That would be great. Thank you.
Yes. Thanks.
I would like to make words on the awards that we're handing out. So as you might know or have seen, we have awards for seed stage, for early stage, for growth stage, for later stage, and for the best foreign market entry into Germany. But we also have 3 special awards, and these are this year, they differ every year. This year these are InsurTech, like last year, investment technology, and for the first time, sustainable finance. And we have one sponsor who chose to sponsor one of those, and I would like to hand over for some remarks from him to Henning Zander, Head of Startup Programs at Areal Bank. Henning.
Yeah, thank you, Michael. It's been a great session so far. I hope I don't ruin it now. So, yeah, warm welcome from my side. Maybe a few words on our award. I guess sustainability, digitization, and new technologies. The financial sector is probably undergoing a profound process of changes at this time, and around the world, companies are working to adapt their value creation processes to the requirements of sustainable business. And I guess both customers as well as investors, but also shareholders and employees, social groups, as well as political decision makers benefit when companies and other organizations make their contributions to a future in which economic, ecological, and social concerns are in the greatest possible harmony. So ESG has a very high relevance for industries, but especially for the property industry. And so for us as a property financier, we're therefore aware that we have a special responsibility to look after our environment and to take action in this area. And in everything we do, we therefore operate, act, and make our decisions sustainably out of conviction, basically. And so Aareal Bank adapted to these developments years ago by implementing a comprehensive sustainability management system. And this is because as a bank and partner to the property industry, we're active in two sectors that play a significant role in the transformation of the economy. This is first, of course, the financial sector, which plays a role in promoting sustainable development through its financing activities. And then there's a tremendous leverage in the real estate industry to achieve the climate targets set by the EU. So maybe a word on the startups here. We believe that we can only achieve these goals together as an industry, and that the sustainability is everyone's business, basically. But especially for young companies. And for us, this is also the reason why we are sponsoring this first ever ESG Special Award category of the Fintech Germany Award this year. And we want to honor the startups that demonstrate aspects of sustainability, either in the business model itself or in the actions, and thus want to help shape the industry of the future of our industry on many levels. Sustainable finance will become much more important in the future. We're sure of that, and we're pleased to see that many founders are already taking this important field into action in their business models. So the huge potential for creating sustainable added value on the basis of data-driven models is huge, and at the same time, they're still, I guess, in their infancy. And so as a real estate financier, we want to give ESG initiatives the stage they deserve. And we're confident that we will succeed in doing so to some extent with this ESG Special Award. So to sum that up, as a jury member, today I'm very confident in this regard. And among the numerous applicants, I've already seen some suitable candidates, and I'm certainly looking forward to getting a more profound picture in the coming month. And I'm sure that we will find a suitable winner for this category. Not only because of this, but also because of the numerous exciting applications. I'm now looking forward to an exciting jury meeting today and the further process in getting to know you all better. So thanks a lot for your attention, and yeah, looking forward to the rest of the session.
Thank you very much.
Thank you very much, Henning. That's great to hear that. And I think it's important to state that the whole jury is going to determine the winner also for the special awards. So it is not only one sponsor, in this case Aareal Bank, who does it, but because it's a distributed and joint approach, I think Aareal Bank especially to sponsor this award, the special award. And now we continue with the startups, and next in line is Block Size Capital, please, from Frankfurt. And I think we have Jörg. The stage is yours.
Yeah, hang on.
quickly connect. All right. Block Size Capital. We're a Frankfurt-based startup. There's a bit of an echo in the connection. I'm not sure whether it's normal. Okay. So the main topic for us is connecting digital assets. Digital assets, what are those? We've all heard of Bitcoin, Ethereum, and other cryptocurrencies. These are just the tip of the iceberg. The real revolution that's behind this, and this is the forefront of finance nowadays, is that we believe that a large part of these assets, that we think that a large part of the assets in capital markets nowadays will be running on distributed ledger technology in the coming years. That means it will not only be Bitcoin and Ethereum, but all other financial instruments that we see nowadays will be on distributed ledger technology, blockchain technology at some point. The challenge in the current environment is to enable participants in the traditional financial markets and other consumers to actually connect and to use and to handle these assets, and that is the challenge we have come out to solve. The startup was founded by Christian Lavic and Christoph Impokoven, who had an idea during the early days of Bitcoin to found a fund and to trade a fund, and then they realized that the infrastructure for trading a fund properly was not even in place. This was how the company was born, founded in 2018. Later, I joined as COO and Thomas as sales and business development head. The three major problems we are solving are, first of all, infrastructure. For digital assets, there's a lack of trading infrastructure, lack of infrastructure of storing these assets, accessing these assets, transacting these assets. And this is one of the main hurdles for many of the market participants to enter into this space. The second big problem is liquidity. There's a fragmentation of different exchanges, different assets, different procedures for onboarding and connecting to these exchanges, and so on. So this is a challenge and a problem that we are trying to solve. Thirdly, compliance. We're dealing with banks and asset managers, family offices, and they're used to very, very high standards of compliance and compliance to and in a very regulated field. So making solutions compliant and institutional grade is another big challenge that we've come to solve. How are we doing this? In terms of trading and connecting digital assets, we're operating a digital SaaS solution, digital asset SaaS solution, which we'll later see connects to different APIs to the markets, different exchanges, and enables players to almost seamlessly integrate and plug and play. We are offering an infrastructure that connects end to end from transaction in the fiat markets to storing those assets and trading them and later selling them. Everything is seamlessly integrated. What we also have is a algorithmic smart order and order router, which allows for best execution under all conditions, under all market conditions, and all of this, as we said, is fully compliant. We have three APIs that connect to markets, trading, and settlements. This is how we solve this. Now I've lost a bit of time. On the lower left-hand side, we see the client who is basically trying to access those markets. We connect in the middle to custodians and with block size core to the secondary markets and enable the customers to basically to trade. This is the business model, because you're going to ask about it. We are basically selling data. We also get a cut on the digital asset brokerage, basically on every trade that's made on the platform. And we also get revenues on how the assets are custodized and basically in the custody. Yeah, the addressable market, we have this year, there are about 70 billion of assets under custody and 0.5% are addressable through us. Yeah, and yeah. Sorry. I keep hearing myself, so I got a bit confused. Yeah, great.
Thank you.
Thank you anyway. Great presentation. If I may start with the question, what in your business model, what is your assumption in 5 years' time? What is the share of traditional asset classes traded versus cryptocurrency?
We have the big specialist here in the audience or in the jury, Professor Sandner. I'm not saying something wrong, but we see that a significant part of the assets, and we see this in the legislation at the moment. We've seen a new laws to this effect, and I think we'll be on the way of seeing a significant share of assets, traditional assets, going digital. And also that new assets, newly financed, like new financing capital markets, will be done purely digital. That is fair to say. Probably a 50%, and that's already quite striking. It's a huge volume.
Can I make a sequence in asset classes?
Again?
Do you see a sequence in asset classes moving?
I think, I mean, at the moment we're looking at the currencies. You saw that, with Bitcoin and other cryptocurrencies, we're already with the first application stage. Then probably now, and we have obligations, we have stocks, and we have derivatives, and I think in this order probably it will move. I'm not sure if if the regulation will be this fast, but the technical possibilities are there.
But Jörg, Philip here, you're so far focusing on crypto assets only, right? Because
yes,
securities and digital securities are not ready yet for being transacted on this level. So your business right now is focusing on crypto, but it might extend to digital securities. Did I get this right?
Yes, this is correct. Essentially, the infrastructure for this is the same. Basically, these are the same rails that the digital assets in this future will run on. Crypto assets are tradable now, and they're the most available, but in the future, they'll be using exactly the same infrastructure. And this is what we're telling clients, that if they go into this area now and start with the cryptocurrencies, they'll be ready for the next step, basically the bigger asset classes as well.
Do you hold any licenses, or do you plan to apply, or are you in the application process for any?
We are currently under a tied agent model with Bankhaus von der Heydt, offering this together. So basically, we don't have the own license, but we're using the license umbrella. But we're planning, we're looking at integrating our own license as well. We're currently looking at that. Yes.
The custody license, or which license is it then that you need?
No, this will be for trading, basically a brokerage license. Yes, because that will allow a complete end-to-end process. We basically will have a connection to custody, we have trading, and we're also basically we're a broker dealer as well. So
what is the impact?
Yeah, so we don't need a third player in the mix.
What is the impact that you expect from the upcoming European regulation, the MiCA, with regard to your business model?
I do think that this is positive. In general, we see that that in the regulatory field, everything is moving into the direction that we've foreseen, not as fast as we sometimes want. But I think things move in our favor because the regulator essentially says yes to the asset class and yes to the technology, but they say, but it has to be fully regulated, it has to be fully compliant, it has to be under, it has to be functioning just like everything else in finance. And this is what we've been building all along. We've said that if you build something in this space, it needs to be transparent, it needs to be compliant, and so on, and this is what we're aiming for. So we'll see this definitely coming. The genie is out of the bottle, but there will be regulatory guidelines to follow, and those will be stricter. This is basically what everybody wants, and this plays into our hands, I feel.
Michael, you're muted.
Yes.
Oh, yes. Here we go. I wanted to say time is up. Sorry. Thank you so much for the pitch and all the answers. And now we are coming to Uncap, please. Unconventional Capital. Franziska, the stage is yours.
Thank you, Michael, and thanks everyone for having me. Yeah, so hi, I'm Franziska. I'm one of the co-founders of Uncap. And this is Nathan. Nathan is a film producer from Kampala, Uganda. And I actually never met Nathan in person before. And I know nothing about the film business or the East African film business. But nevertheless, we invested $20,000 in Nathan a year ago. And Nathan is a brilliant entrepreneur. We didn't know that, but he is. And despite Corona, he won a contract for a large TV series last year. And as a result, his turnover actually increased tenfold, and our investment multiplied. And what we made, I mean, we made a bet. We made a bet that good entrepreneurs build good companies. And in the beginning, actually, nothing else really matters. In Sub-Saharan Africa, there are over 20 million entrepreneurs like Nathan. They are actually the backbone of Africa's growth. And 6 of the 12 fastest growing countries are in Africa. The average age is 18 years, and the population will double from 1 billion to 2 billion in the next 30 years. That's like an enormous, almost unprecedented potential. But 98% of these young companies have actually no access to finance. There's a shortage of 90 billion that are waiting to be invested. And one of the main problems is the insane cost of capital. So the ticket size of the investment are small and the costs are much too high. Many of these young entrepreneurs live somewhere, say in rural Senegal, 2 hours away from the closest city. They haven't been to a prestigious university, they don't have an international network, they don't know how to build fancy pitch slides, and provided you as an investor would find such a company, your return would actually be gone the moment you get on the plane to Dakar, or actually kind of like the car drive now here to the airport. So we were wondering why everyone wants to invest in the most innovative startups, but the way we invest, so the process itself, has been largely untouched by any innovation. The current way is expensive, it's super exhaustive for founders, and it's also clearly failing not only minority groups, but whole regions. To be able to invest in this growth, we then decided to just rethink the old way of investing. We provide seed funding to young companies in Africa, completely remote, purely based on data, and highly standardized. So this lowers the cost of capital to a minimum and also makes the process as unbiased as possible. Our goal is that every good entrepreneur gets access to funding, no matter their gender, no matter their background, and no matter if they have a great network or not, without compromising performance. To be able to conduct due diligence on thousands of applicants, we focus on what truly matters. And for us, that's the founder. So instead of historic data further reinforcing existing qualities, our algorithm measures entrepreneur potential that predicts future success. Entrepreneurs receive a standardized automated offer through the platform, and they can receive funding within days. We're utilizing existing KYC, deal, and payment solutions to make the process fast and secure. And we invest through a new equity-based revenue sharing approach that actually generates revenues after 3 months and is independent of exits. And in our portfolio management, we focus primarily on actually behavior economics instead of complex and above all, very expensive controlling. Our platform provides entrepreneurs with a transparent and independent track record that they can use for future funding rounds, and that is also focusing on more than just financials. They also receive support through automated KPI analysis, access to resources, training programs, and accelerators. But they are, and that's very important, they are in the driver's seat to decide how to run and scale their business. Since our starting in 2019, we've raised over 1 million in funding to build our technology and to test and iterate this technology with 2 rounds of completely like 29 investments. But we're actually just getting started. By the end of this year, we're investing in 200 companies. And by the end of 2025, we actually want to be able to provide funding to 50,000 entrepreneurs. We want that not only Nathan, but every good founder gets access to funding. I have a few seconds to spare. Thank you. Thank you for listening. I know what we're doing is quite conventional. have any questions, shoot.
Wonderful, thank you. We'll add the remaining time to the Q&A time. Jury members.
Sorry.
Which question?
Sorry, Michael, I didn't want to interrupt you. You said the process is completely remote and automatic. How do you make sure that the money is actually being used in a non-fraudulent way?
That's a good question. So actually, we also basically there's one thing, you don't want to invest in a company that is a fraud from the beginning, but you also don't want to invest in a company that it's then using the funding for something you kind of doesn't help the business. And so the first thing is actually, again, where we're using a lot of behavior economics. So things like making the process, after a while, making the process really complicated, kind of stepping up the time that it takes to complete the application, but also things like testing if the revenues they report in the beginning and the revenues then they report when we invested is actually kind of matches the trajectory and things like that. On the other hand, once we are invested, we're connected to their accounting tool directly. And so we can actually see what they're using the money for, and if actually the money has the effect that they claim that it would have. Does that answer your question?
Yep, thank you.
Hi, Franziska, good to see you again. Can you tell us more about how the judgment of the founder's character is and how it differs? You have studies made in Europe, I guess, or on African founders. Yeah. How do you do this? Because everyone is different. And
yeah. So basically, that's also why we started investing super early in the process, because we started with hypothesis on how to predict entrepreneur success based on mostly European data sets. So we decided the best thing we can do is start building our own data set as fast as possible. What we're seeing so far is that not necessarily the skills and the behavior that you're looking for is different, but the way that you measure it. So one thing we could see, for example, is that entrepreneurs scored much higher on the scale of narcissism in Africa. But we are pretty convinced that this is not because they're more narcissistic, but it's because the way that this is measured does kind of discriminate them so far. The same goes actually for female founders. No one can really tell you if actually kind of the hypothesis about entrepreneur success that we know so far, and especially kind of personality traits, if they're actually applicable in that way to female founders, or if they're per se already quite male and influenced by the data sets that we have on successful startups so far, who are, surprise, kind of mostly white male men. So we are using a kind of a lot of randomization and kind of constantly testing our hypothesis, iterating, to actually see how we need to adapt the process, and if there are things that we want to add, something that we did already between the first and the second round, or things where we need to tweak the way the questions are framed.
Michael, you're muted.
I think it's one more question.
Again, it had to happen. One more question. Quick question, quick answer.
Oh, yeah.
You're collecting money.
Then it's my.
Pardon?
Okay, then I will ask one question. So who is funding this?
So far we're funded by a fantastic group of angel investors, 14. But going forward, and they are invested directly into Uncap, so they covered everything from the investment technology. Going forward, we're setting up an SPV this year, and we'll issue our first bond in the form of a Genussschein. And there we're targeting, for the first stage, kind of high net worth individuals and family offices to guarantee a certain level of professionalism. But going forward, we want to actually target retail investors, but after 5 to 10 years, also pension funds and others that are looking for kind of a guaranteed return.
And that's going to happen on digital assets then, trading on blockchain.
Exactly. We're going to utilize all the solutions that were presented so far.
Thanks, Franziska. Now we have Tech 11 from Würzburg. Pierre, stage is yours.
Hi, guys. I'm Pierre, co-founder and managing director of Tech 11. Thank you for having me. You already can see the mission statement of Tech 11. We want to become the leading core insurance provider across Europe. And I don't know how familiar you are with the insurance industry, but the main problem of the insurance industry are their outdated core insurance systems. So we're talking about policy administration, claims administration, etc. Because the majority of the insurers are still running on legacy systems built in the 70s or 80s of the last century. And on the other hand, we have the digital world. Today, all the insurers need to be flexible, very fast and agile, and their core insurance systems are the main barrier for them today. And why? Because this is the problem of the industry. We are a provider of a digital P&C core insurance platform. Our target groups are risk carriers, but also big MGAs. We are positioning ourselves as the leading provider in terms of technology stack, and brings us into the position that we are faster and more holistic than our competitors. This means that we have a very comprehensive asset. Company has been founded 3 years ago in April 2018. I'm very proud that we have a team of 47 people so far in our team. Everything built up with our own hands and money, but nevertheless, I'm very happy that last month High-Tech Gründerfonds decided to invest into Tech 11 to accelerate our growth and international expansion. High-Tech Gründerfonds. What you can see now is why I believe that we are a very special company, because we do not have only one software product. We build multiple software products which we combine inside a Tech 11 insurance platform. This means that we have a product engine and a rating engine. We have an end-to-end policy and claims administration system, but we also have the dedicated modules like a business partner module. We built a document management system, and we have an accounting and commission module. All of these business modules are designed as microservices and are orchestrated with a BPMS solution. We are using an open source solution for this one, Camunda from the German market. If we go ahead with the slide. We are using an open source solution. Yep, now sorry, I have a delay here. So how can you use our platform? It depends on the size of the insurance company. So for small and medium-sized companies, we are doing legacy replacements. So really, we are doing the modernization of those systems built in the last century. So very long-term projects, very intense, with a migration at the end. And on the other hand, you can use our platform for what we call a digital speedboat. The users here are mainly tier 1, tier 2, and tier 2 insurance companies with a more digital and international footprint. That means for all the insurance companies who need to design new innovative insurance products, who need to connect to new distribution channels, and maybe to develop new markets or to test new markets. Also, that kind of companies need an end-to-end solution. So that's why our asset can be used in that two ways. Then if we go ahead on the next slide, yes, this is what the kind of customers we have at the moment. We have 2 big MGAs and we have 2 risk carriers who are using our platform. All our clients are in production today. The most famous logo for sure is Ergo, where in the end of last year, we did a legacy replacement for all B2C digital lines of business. From kickoff till go live, it took us only 14 weeks to implement our solution, which is kind of unique on the German market. And what is great also about Ergo is that we are doing the operations completely by Tech 11. So we are providing operations cloud-based as a service. Then if we go ahead, yes, that's our pipeline. It's just to give you a feeling with what kind of clients we are working at the moment, but considering time, I'm jumping that one. And I'm directly going to the last slide. What you can see on that slide is our business module. So everything we built up in the last 3 years was really just to build up that very complex asset to prove that we have the traction because the real growth of Tech 11 is starting now. We are really now in expansion phase. So we are building up now and investing in the structures to jump outside of Germany and to scale on the European level to really become a software as a service provider in future. Thank you very much.
Thank you too.
Jury, please.
Yes. Can you hear me?
Yep.
How many policies and customers do you have on the production system right now? And because you mentioned legacy, so legacy, of course, in the German market is key. So how about migrations, and how fast are you with migrations for bringing legacy into your systems?
Yeah, migration is also for us, it is a complex issue. It's not so much on the technical side, as more analysis. The analysis is the challenge, because you really need to understand the business side. It's not only a technical issue. So you need to analyze the product, a lot of tariff versions from history. You need to understand and to analyze all the business processes which are connected to the lines of business. So it's mainly on the analysis part, and then the migration is just something you can do. The typical 90% you can do fully automatically, and the other 10% are complicated and take as much time as the 90% you did before. The client, your first question was about the number of clients. I showed to you all the clients we have, so it's not mass business what we are doing. The projects we are doing have a high volume, and with 4 customers in the P&C area after such a short time is already a pretty good market standing, because there is no leader in the P&C world in the insurance industry.
Can you tell us a little bit, can you hear me? Can you tell us a little bit about your pricing model and about your technology stack?
Yeah, please. So pricing model, our revenue model has 3 streams. One is we have an annual license fee, which is a base license, which is starting at 200K by year, and then depends on the GVP, so the gross written premium the insurance company is managing. Second revenue stream is professional services. So if we have people we are bringing to the projects, then we have this kind of stream. And the last one, which we have with Ergo, for example, is operations. So we have recurring operational fees on a monthly base. And sorry, what was the second question? Technology stack, yes. So we built the platform just on latest technologies and industry standards. So the asset itself is built in Java, is built as a microservices architecture with a strong process-driven approach, because the processes and products is where insurers still can differentiate. So we need to give them a tool where they can configure very easy and really configure, not develop processes and insurance products.
Thank you.
My question on the value chain: when you would take over legacy books, would you also do the operations in the sense that you will do the customer interactions, the end customer interaction, or is that still with the incumbent in that stage?
This is the job of the insurance company. We're really just the technical vehicle. Our platform is the vehicle for them to run their complex business in a lean and future viable way. So our platform is really is just managing our policy claims, etc. But we are not doing customer interaction. So at the end, policies are sold from agents or coming from direct channels, and our platform is just designed to do as much as possible fully automated processing of all that processes. So in a perfect world, everything would be completely shadow processes, Dunkelverarbeitung.
Yeah, just a follow-on question. Would you do an integration into the systems of the incumbent, or is this more rather like a self-standing kind of system?
No, it's a very good question. It's always about integration. That's why we build our asset in a modular way. I made the example that we have a document management system. So for small insurance companies, it might be good that we have a document management system, so they don't need to invest in a different software. But for bigger companies, they have a central document management system in place. So then it's just we disconnect our module and we integrate. It's always about integration. And that's why we have built that asset in that kind of technology. So all the services in our platform are available as REST APIs.
Is it as a USP only the technology, or do you offer also additional services and functions which our former legacy systems do not have, especially AI? Like you mentioned, robotics.
It is not only the technology. There are other parts which are part of our USP. One is what I said before, the configuration principle. Everything what should be configuration inside such a system for business users on the insurance side. So building products, building tariffs, designing processes, designing templates for policies, invoices, etc. Everything that can be configured. Our competitors is a lot of coding. It takes a lot of time, etc. And then the second part is also independency, because since we're using only technology standards, we're able to enable our clients to do many things by themselves. So they're not dependent on the vendor for 10 years, 15 years, 20 years. And that's a great additional USP on our software.
Thank you very much, Pierre. Fortunately, we have to come to an end here now. And now we're moving to the north of Germany, to Bremen, where we have Christoph Henke pitching early signals. Christoph, the stage is yours.
Yeah, thank you very much. My name is Christian Henke. I have a PhD in mathematics and model experience in various application areas. And it is well known that machine learning methods on social media for stock forecasting is a competitive edge of hedge funds. And why should only hedge funds be allowed to use these methods? And we offer this advantage to the private investor. That's our mission. If we look at the problems, we have the background that the broker market was made accessible to as many people as possible through low costs or flat rates. But unfortunately, the state-of-the-art methods for stock forecasting are not accessible for the private investor. And neo-brokers look for features to differentiate themselves from each other. Here's our solution. We are not only offer emotional data, we offer the results of advanced machine learning on social media, which tells the private investor whether the stock price is going up or down. And our methods have a forecast quality of 60 to 90% after the opening of the New York Stock Exchange. Last week, we had an average of 88%. You can find this information on our website. And together with our methods, we bring neo-brokers with their clients to the next level by providing them our daily results. We have already a working prototype which ensures the mentioned quality, the daily stock and cryptocurrency letter early signals. The software is already working and the hardware is already working. And if we look at the market, on the one hand, we know that neo-brokers pay up to 88 euros marketing costs per customer and year. And on the other hand, we have 38 million stock depots in the German-speaking countries and an unknown number of stock depots around the world. Yeah, the USPs of early signals. Since 2016, hedge funds have been using machine learning on social media data. And the scientific literature states that this is achievable with a forecast quality between 60 and 80% for single stocks. And we offer much better forecast quality for a list of stocks. And how do we achieve this? First, we have the spam filtering on social media data. Second, the machine learning on social media data. And third, classification of ML suitable stocks. And the last step, very important, transparent control of the forecast on the next day. And with this step, we ensure our forecast quality. And so our results are real and provable, not only buzzwords or nice websites. Why early signals is uniquely positioned. Yeah, anyone can pick out a few well-performing stock forecasts after the show. But what is the verifiable forecast quality for all the suggested stocks? I think that can you only find at early signals. And we have competitors. There are 2 or 3 who wants to do similar things, but often there are only nice websites, buzzwords, no information about methods, no information on the forecast quality. For example, subcapitals. On the second, we have the ETF. Here, the private investor, Bas van Eck, can also benefit from machine learning on social media data, but the stock analysis is only carried out monthly. And social media hypes are missed. And the scientific literature states that the relationship between social media news and stock price development is not beyond tomorrow. And so this ETF is totally useless.
Thank you very much.
I see my
Any questions?
time finished. Yeah. Are there any questions?
I have one question. With your business model, how do you make sure that you convince retail investors of investing long-term and not turning them into short-term oriented traders?
Maybe we can move to our business model, to my business model slide. Is that possible?
No, that's unfortunately that's not possible technically. Sorry.
Okay. I have a slide with my business model. I offer 3 packages, which depends on the number of customer of neo-brokers. One for the bronze packages for 99 cents per customer and year. The silver packages for 69 cents per customer and month. And the gold package for 49 cents per customer and month. And please keep in mind, one new broker pays up to 88 euros marketing costs per customer and year. And that's our business model so far.
Did you talk to any new brokers and got their feedback and how they would implement the solution into the product?
Not yet. I'm very early in the starting process. And I have to prepare the sale to the new broker.
Can you tell us a bit more about your... Sorry?
Andre, go ahead.
Yeah, sorry. Can you tell us a bit more about your strategy for scaling this up? I know whom you want to approach, but is there more strategic thinking behind this already?
Sorry, about my idea to scaling this up. That means that we look to more stocks, or what do you mean with scaling up?
I mean, just to create the business volume you need for getting clients on board, to get more funding, get team in place. What is your ideas behind that in a nutshell?
Yes, that's one reason for my that I take part of the Economic Award. My hope is that I get contacts with this award. And I have not one or two other ideas to keep in contact with the neo-brokers, but the idea are not yet finished.
Okay, thanks.
Any more questions from the jury?
Do you also do
That's not the
predictions
case.
for sorry? Do you also do predictions
Go
for
ahead.
like crypto assets or just stocks?
Stocks and cryptocurrency.
Okay.
As of today, I have 3 cryptocurrency in my list.
Okay. There are no further questions. Then we say thank you to Christoph.
Christian.
Oh, I'm terribly sorry about this, Christian.
Before
and then we would Hans? Yes.
Since we have been told by Frogster that they got to be out in 10 minutes, would it be possible to put them now? This is live, so yeah, so please, that would be great, because before we get to the next point. So is Frogster ready?
Absolutely. Sorry for putting you under pressure. So I really have to jump off, but highly appreciate your flexibility here. Awesome. Cool. Then let's start. Yeah, my name is Max. I'm the CEO and founder of Frogster. So Frogster is a German-Israeli payment security company, and our goal is to minimize fraud and to maximize revenue. Because fraud is obviously one of the biggest problems in today's e-commerce world. Because on the one hand, the fraud rate is growing twice as fast as the e-commerce rate, which results in that e-commerce merchants are losing around 1.5% of their annual revenue to fraud, which are around 47 billion euro losses every year. And of course, this is a very big problem for them. And there are solutions out there. I mean, they haven't waited for Frogster. Nevertheless, these solutions have one big problem, because most of the solutions are based on outdated technologies, which means that while on the one hand you can solve this 1.5%, you're creating a much bigger problem in what we call the false positives. So you can say around 20% of all incoming transactions are getting wrongly blocked. And now when you combine the 1.5% plus the 20% and also your marketing costs, we are talking about a global loss of 1.2 trillion euros year over year. Or to make it simple, it's the GDP of Austria and Switzerland combined. I think now you understand in which market we are operating and also what problem we are facing. And before I'm deep diving more into how we solve it, I would like to show you some success story with one of our customers, which is Ingenico. For those who haven't heard about Ingenico, it's one of the largest payment companies in the world. And when they decided in 2018 to go live with us, we reduced their fraud rate by 60%. But in the same time, and which is the most important KPI for us as a company, we increased the revenue by 7%. And because we have a lot of automation in our processes, we are also reducing the operational workload by 40%. So now the question is obviously, how do we do it? And for this, we have to go back in 2014 when we started Frogster, because when we started Frogster, we said, okay, we have to invent technology new. And so we went on a 3 years R&D journey. And in these 3 years, we built a proprietary technology where the core of the technology is an artificial intelligence engine. Around that, we built our own memory-based technology. And at the end, we wanted to combine the best of both worlds, the human-like accuracy with the machine scalability. So how does it work in real life? So think about an e-commerce transaction. Think about you go to Nike.com, for example, you choose a pair of shoes, click on buy, and then either the merchant or the payment company sends us the transaction. On average, we receive between 20 and 60 data points, so regular e-commerce data, name, billing, shipping address. And here's already the first problem in the process, because making a decision based on this limited amount of data is pretty hard, right? So that's the reason why we enrich at first every transaction with around 2,500 data points to get more insights about the customer. And based on these insights, we send everything to our AI engine, where we make the calculation and decide if a transaction is good or bad. And this entire process, end to end, as you can see here, takes us less than 15 milliseconds. So it's really real time. So, and this is very important because the customer shouldn't see us, feel us, etc., because it all affects the acceptance rate. Another key highlight of our technology is that our AI solution is not a black box, what you normally have when you work with AI. Actually, we can tell our customers very precisely why we block or accept a transaction, which is very important when you go into an operations. Last but not least, so what are the two products? I mean, at the end, we have two products. We have a hands-on and a hands-off product. The hands-off product is called fraud-free, where we as a company take over the full liability for every payment transaction. So this means you don't have to care about anything. And if we are wrong, we pay out the losses within 14 days. Very important to mention, this is a product which is fully reinsured by the world's largest reinsurer, Munich Re. And for more professional risk teams who want to manage their risk by themselves, we have FIRE, which is an AI-based risk management tool where you get the AI score, and around that you have all the strategy tools in order to facilitate your risk strategy. And last but not least, who are our customers? I mean, at the end, we have two pillars of customers. On the one hand, the payment companies, as I described to you, and on the other hand, we have e-com merchants from all various industries like fashion, consumer electronics, etc. Thank you so much.
Thank you very much. So we'll have a short round of questions, please.
So there are many types of e-commerce fraud, and you offer kind of a basic insurance package. What kind of fraud is insured under this policy, and what's excluded?
Good question. So, I mean, we are focusing with this product mainly on transactional fraud, right? So, stolen credit card credentials, etc. And that's what we are insuring, right? So we are not insuring KYC, AML, account takeover, stuff like that.
Okay, we have time for one more question, please.
Okay.
Okay, then.
Right. Then
time is up. Thank you so much.
Thank you very much, guys. Bye-bye.
So now that I've intercepted, back to Michael with your agenda.
Yeah, thank you. We talked about the special awards before, and we have another sponsor of a special award, and that's Helpling Business Advisors. And I would like to introduce and welcome André Wassmann, who's member of the management board at Helpling Business Advisors. And I would like to hand the floor to you now.
Thank you very much, Michael and Franz, and I'm happy to be here. It's really an honor, and I think we have seen fantastic presentations so far. I would also like to show you some slides. This works with the internet ticker now. Yeah, just to give you a few words about Helpling, who might not be that familiar to you. Helpling Business Advisors is part of the International Helpling Group with headquarters in Zurich. We focus on M&A, corporate finance, value chain management, digitization, and turnaround management. I am responsible in the board for the M&A and corporate finance business. We are also part and founding member of the International Corporate Finance International Group, which is our global reach to international and cross-border M&A business. I think it's important to know that Helpling Business Advisors has a footprint in mid-cap M&A and mid-cap business for over 25 years. We are very much dedicated to interdisciplinary work. We work like an investment bank, but I think we also have the strengths like a smaller M&A boutique, a strategy advisor, and like auditing company, because we have all the specialists on board. And I think with this, we are quite well positioned to help mid-market companies in their challenges and in their corporate finance businesses. I think what is also important to know is that we are not only a German-speaking brand, we are quite well known in the DACH region, but we have, as a global reach, our corporate finance international group that we are a founding partner of, and with this we cover more than 20 countries, have more than 250 professionals just in M&A, and with our Helpling Business Group we have more than 500 people on the front to help our clients. Internet clicker now. Does this work? Yeah. Sorry. I think if there's one message that you took from us about Helpling Business Advisors, it's our, from my point of view, very unique combination of M&A / consulting, advisory, and our engineering. Because what you will not know is that Helpling was founded as an engineering house. So what is quite important to us is that we bring all this knowledge to the base of our clients, so we can, if we help you in an M&A project or a fundraising, we can also bring our engineers to the table and discuss certain things that give us a global reach in terms of the product and services. But not only this, but we also have our corporate finance know-how and our economics and business people know-how in place. I think this is really extraordinary and is really a USP compared to potential other M&A boutiques as well. With this, I think going on to the next page, I would also like to show you our unique approach. To my mind, kind of unique approach. We not only cover more or less all and every sector in the market, but I think what is more important to us that we see where the developments are going to, where the capital is flowing into, is the certain mega trends. And here we try to really position. This is not because we think it's not worthwhile to cover the sectors anymore, which we do with our corporate finance footprint globally. But I think what is important, and this is the reason why we're also quite dedicated to help you in fintech and in younger companies as a startup, is that we see that the sector know-how and the sector industries are growing into challenges that come from these mega trends. If you take like the mobility part, then you see that you have several industries working into this now. It's energy, it's automotive, it's financial industry with insurances and also with financing, but it's also ESG and other things that are important. And we think that it's more worthwhile to look into these developments from this point of view. Our motivation to help you guys is manifold. I think it's on the one hand side, as I said, it's the people in Helpling who are dedicated to technology, to innovation. We have always been a company that focused on innovation. I think one nice anecdote is that we helped also develop the Nespresso machine. So we will have had some contact to our products as well. But not only this, we also work in aerospace. We work on small robots that go through your veins and look whether there's anything wrong in your body. So I think we are quite well positioned in innovation, but also in business and corporate finance. And this is important to let you know. We are intrinsically motivated to help you because we have our footprint also in financial services. Me as a person, I have a background in banking, in capital markets as well. I've worked more than 20 years in M&A and strategy. I have established my own digital business model when I was working in asset management. All this know-how I brought together and learned this market quite well. And for a couple of years, I observed the developments also with formats like FTGA. And now I really took the chance and discussed this with Michael that we could help you guys here with this special award in investment technology, which is a personal motivation for me as well. I believe it's very important to bring forward investment technology and help people in financial services develop the business out there. Thank you very much.
Thank you very much.
Thank you, Andre. I think it's a good time. There's going to be massive M&A opportunities in the fintech sector and also in Europe and Germany, of course. And then we would like to continue with the last two startups, actually. And we're calling to the digital stage now Moonfair from Berlin. Steffen, please, the stage is yours.
Pascal, Michael, and the jury, thanks so much for having me today and Moonfair here on stage at the German Fintech Award. Quickly about myself, look, my name is Steffen Pauls. I'm the founder and CEO of Moonfair. And, you know, I'm an investor by heart and an entrepreneur really by mind. Apart from having spent more than 10 years in private equity with KKR in London, I'm a serial entrepreneur and have founded a couple of businesses throughout my career. And most recently, Moonfair. Look, I'm a little bit naked today because I don't have any charts. And the reason is what we do at Moonfair is very simple. We are taking investing into private equity into the digital age. And here are my 4 core messages that I like you to take with you today from my little speech. First of all, an unprecedented value creation is happening in private markets, in private equity. Unfortunately, most private individuals are left out as they cannot access these markets. We at Moonfair, we are changing this. We have developed a digital solution that allows private individuals to invest directly into some of the globally best leading private equity and venture capital funds. Our mission, so, is the democratization of private equity. And fourth point, we are already the market-leading digital private equity platform in Europe and in Asia, and we are growing the business very quickly. Okay, let me go quickly one by one in terms of the points. Unprecedented value creation is happening in private markets. You're all familiar with it. We are living in a zero to negative interest environment. And the consequence here is that we are seeing that the traditional public markets portfolio is not anymore working. If you don't make any interest rates, you have to look for alternative investment opportunities. And this is exactly what private markets offer. And this is why a lot of money has been flowing into these markets. And putting a few stats behind what I'm saying here, private markets they have outperformed public markets across all economic cycles in the past. Since 2000, private equity asset value, so private markets, has grown 4 times faster than public equity market capitalization. We are seeing that the opportunity set in private markets, it's 10 times larger than in public companies. And companies are staying private for much longer. So a lot of reasons to move into private equity. The issue is that private investors are left out. Professional investors on average, they allocate as much as 25%, some of them more than 50% in private equity. But the access is restricted or has been restricted to professional investors. And this is exactly what we at Moonfair are changing. We allow people, private individuals now, to access the market, to invest into private markets, where you see, generating returns of 20% and more per year in terms of IRR, to invest with as little. It's still a lot of money, don't get me wrong, but it's much better than what it used to be. It used to be 10 million minimum invest. We bring it down to 50,000 euros. We provide access to the best Ivy League funds, I call it, in the industry. You find the KKRs and Carlyles and Cinvents, but also best of US tech on our platform, more than 30 funds over the past 3 years. And then, of course, there's the ease of use. It's very easy. You can invest end-to-end through our platform fully digitally in 50 minutes. And then a fourth thing that we have solved for our customers is many people were saying, look, I don't want to put my money to work for 10 years or so, and I don't know what the future brings to me. So we are providing liquidity through a secondary marketplace and make an illiquid asset class liquid. Quickly, in terms of numbers, I said at my fourth point, we are already the largest platform in Europe and in Asia, more than 800 million assets under management, over 1,500 people have invested with us. We are active in all European markets. We are active in Hong Kong and going to Singapore as we speak. We have a world-class team, and we have the best offering in the industry. So in one word, what really makes us special, it is really at the end about, and this sets us apart from other people out there, it's our passion in terms of what we are doing. Because what we are doing is nothing less than revolutionizing the entire way an industry has operated in the past by democratizing a space and opening it up for the broader public. With that, my time is nearly over, and I'm handing over to questions you might have.
Thank you.
The jury, please.
Hi, Stefan. This is Franz. Good to speak to you again. I have one question. What is actually your fee structure on the allocated capital? What's the fee base?
Franz, thanks for asking. Look, this is something that was in particular important for me personally. I wanted to have a very simple, transparent offering. No hidden fees, no kickback from the funds. Very, very clear. So what we charge over and above what the underlying funds charge, we never take money from the funds because we want to have the best offering. We are totally unbiased. We are charging 50 bips on committed capital per year. That's it. And then there's a one-off fee for the structuring of the vehicles of 1%. So very, very transparent. And if you think about that, the products that we have on the platform in the past have realized, as I said, north of 20% IRR. The fee is, in relative terms, very, very low.
Thank you.
I'm not sure you mentioned that, but what's the minimum investment, and who would you deem competitors globally?
Look, the minimum investment is set, so to say, by the regulatory environment. So in Germany, it's the BaFin. In the UK, it's the FCA. So it differs from country to country. Depending on the product and country, it starts with, as I said, as little, still a lot of money, as 50,000 euros. If you're a professional investor in Germany, it's more towards 100,000 euros. If you're a so-called qualified investor, it's 200K. So it differs from region to region. And in terms of competitor, look, that was one thing I was wondering about when I started the company in 2016. We went live in 2018. In 2019, I realized there's no competitor in Europe. I didn't see anyone doing the same what we were doing. And I was, became a little bit insecure because maybe, we were on the wrong path. No one else is out there. This has changed dramatically, and you are seeing copycats all over the world, in Asia, in the UK, in Italy, and in other regions of the world. Look, and we embrace them because the market is so huge. And this is more about educating really people that private markets should play an important role in their portfolios. So the competitors are helping us to educate the market. At the end, I'm convinced the best offering and the best ease of use and customer experience will win. And there, I believe we are very well positioned.
Okay, thank you. If there are no more questions,
just a short one. How would you source your assets?
Look, that's very, very. It's an excellent question, because this is something that I knew from my time at KKR, and I call it the private equity industry is going retail. There's a very famous quote from Blackstone, one of the largest private equity managers in the world, 600 billion in assets under management. And they said in 2018, we want that 50% of all the assets of Blackstone will come from retail. And retail, they mean private individuals. So I knew that the industry had a very strong interest to access the largest untapped pool of capital. And for them, it's really about growing, about diversifying their limited partner, their investor base. And this is why they embrace the opportunity. But they are not equipped, in terms of, you cannot send fundraising people and placement people to people that sign up for 200K euros. They need 50 million, 100 million checks. This is how they are operating. And we are basically, solving the entire long tail of the industry on their behalf or for them. And at the same time, for us, even more important, really fulfilling our mission to democratize the market by giving access to people that should have access. I always, and my team, shares this thought. I found it so unfair that the big boys with 20 million checks can access this incredible industry from a risk-return perspective, and the smaller investors are left out. And this is what we change once and for all.
Okay, I think time is up. We're actually already over our time, so we need to speed up. Thank you so much, Steffen, super interesting. Sometimes it's also good not to have slides, one speaks more freely then. And having said that, we go now to Monite, Ivan from Berlin, last but not least. So stage is yours, please.
Thank you. Let me just see if I can make the slides work. Hey, everyone. It was very exciting to hear everyone's pitching. Great, guys. So, hey, my name is Ivan, and what we're building is basically a one-and-all finance platform, 4-in-1. For now. And the story here is very simple. So I was the head of growth at Penta, and I was speaking with dozens and dozens of German small companies, also with companies all over Europe. And all of them said the same thing, like, okay, banking is great, online banking that looks nice is definitely useful, but our biggest pain is in admin and accounting. And then they would complain about all these different manual things that they would do. Having so many CEOs in the room, I'm sure some of us can relate to this pain. When we have invoices that we need to track if they got paid, when we have to process all these incoming bills, pay expenses to employees and all of that. And then this whole thing comes together at the end of the month or quarter when your Steuerberater is actually chasing you to map all this information and give it to them in a form and shape with which they can actually do the tax return. So the pain was very simple. If a CEO has all of these things happening in different places, and usually they use 5 or 6 specialized tools, Excel sheets, Word documents, etc., it's actually a pain in the ass to do this, and it eats up a lot of their time. The problem was that it's not only the time waste, but also that every single CEO really hates doing this. And this is why we came up with the approach of actually creating a one-stop shop in which a small company, and we're literally targeting anybody from like a freelancer to a 50, 70 people company, where they can just do everything end to end and save at least half of the time and costs. The concept is very simple. If you're an SME, what you have, let's say, fixed in stone is your bank accounts and your tax advisor. So what we do is we build this functionality on top of existing bank accounts. You just hook up all your bank accounts to Monite, and then you can do a bunch of different things right there. So for instance, you can upload receipts to existing transactions. You can invoice your customers from there. You can process all sorts of expenses and pay reimbursements right in the same flow. And then we'll also collect your receipts for online transactions, for instance, subscriptions. And then the biggest added value is that all these documents and all the transactions are in one place, and we automatically map them. So once you pay the incoming bill, you don't have to go and upload it again. You actually have it together mapped automatically. And the concept is that we do all of this on top of existing accounts, as mentioned. Now, when we ask small businesses, a vast majority of them actually preferred to use a one-stop shop solution. I'm not sure why the slide is not switching. Yeah, now it should be there. Yeah, and the vast majority of small companies actually said they would definitely prefer a one-stop shop approach. Having said that, if you look at us in the industry context, we are actually the type of company that's building a layered solution. So we basically create something that works for a specific clientele, specifically an SME, a smaller SME, and we basically cover them end to end when it comes to finance and admin at a price point which is at least half of the price of what they're paying today for all these different tools and processes. Talking about our vision, it's very important to mention that we are looking at something that is a lot bigger than accounting or admin automation. We actually want to hook small businesses with something that they consider a big pain, so automating their accounting and expenses, and then leveraging all the information we have around them. We actually want to offer them additional services, an extension of what we do, where we basically leverage all the existing fintech and SME tech technology on the market and offer it proactively to the small businesses, so they have everything in one platform, and it literally becomes a super app for finance for a small business. And a good example there is, let's say you're a business, you sent an invoice, you didn't get paid, you have automatic follow-ups in Money platform, which is great, but your invoice is still not paid. And then we can actually have an integration with Billy or other factoring provider and say, look, just press this one button and get this invoice paid today. This type of experience is ideal for a small business, but it actually requires a lot of intelligence to build this, which is why we're basically planning to deploy this marketplace strategy in the next round. Talking about the team, we actually have people who've done this before successfully in other markets as well. My co-founder, Andrei, led tech for the biggest and most successful Russian SME bank. Stefan, who's our head of products, led product for Payfits, one of the leading payroll providers in Germany when it comes to technical providers. And I myself obviously took care of growth in Penta. And we just got the financing round of 1.1 million in pre-seeds just beginning this year. We're lucky to have very different investors on board, SME specialists, company building pros, and also people who are very good in building SaaS products, and a set of great angels, including the representatives of the biggest German banks. And we do consider German banks as one of the key partners for the future. Thank you all so much for your attention. I'm now opening up for questions.
Jury, last chance today.
Any numbers, any figures? Can you share any figures, any numbers?
Sure. So we are currently in, let's say, coming out of closed beta. We have around 70 accounts on the platform, and all of these are free trials. Our pricing is on the higher end if you compare us to tools like LexOffice. So we started 29 euros for a freelancer and then at 49 euros for a company. We're basically planning to launch the full-scale marketing around late May, June, and then we will start having the first revenue numbers. But essentially what we have right now is we built a whole platform solution with just a couple of engineers, and it obviously took us some time to actually roll it out to the market, beta test this thing, because inside Money you actually have a full banking functionality. So you use it as an online banking interface, just for all bank accounts.
What are your target markets?
So currently it's Germany. We're launching in Germany. As you could probably see from one of the slides, Germany is definitely in high paying area when it comes to admin and finance. We're all familiar with very strict Finanzamt rules and everything else. And then we're planning to expand all over Europe. Obviously, as we saw again from the same research, the pain is pretty high everywhere. I would say that the 5-year goal is to cover most of the European markets and also potentially create a white label solution, which you can sit on top of any bank in Brazil, Argentina, Taiwan, wherever it is, and basically have the same functionality offered in any region of the world, because the whole benefit of the tech we built is that it's extremely flexible. It takes us 1 to 2 months to expand to a new country, unlike LexOffices and other tools out there, which are very linked to tax systems and take, years to expand. So for us, this is basically the strategy: scaling quickly, focusing on the parts that is most painful for the business owner, which is monkey work.
Okay, if there are no more questions, Franz, anything from
I
YouTube?
have one, if I may. Because how's your interaction and the relationship with the tax consultants, specifically in Germany? So if you look at .f integration, which is kind of crucial for winning this market, how far have you come with that?
Yeah, that's a great question. So we actually built this together with a Steuerbüro, actually with a couple of them. So when we started building the product, I was coming more from a Penta context where we already had SME base saying, hey, we have a pain. And we also had Steuerberaters on the other side saying, yeah, we also have a pain. And we basically took both inputs from the beginning to build this. So this was basically built to be usable for both a Steuerberater and the business owner, right? Tax advisors and business owners. We do have .f export as of right now. We're planning to do .f integration later on, but as of right now, we fully plug into the existing process. So if you have a company and you have your accounting process, you can just come to us, and this won't mean you have to change your bank account or anything else. So this is really made for the 90% of the market that is not using Penta, not using Clio, not using many of the advanced fintech tools. And as we all know, that the real SME market is exactly like this. Real SME owners are not like, early stage guys like us, very innovative, etc. They actually like their Excel sheets or even sometimes paper where they print everything and send to Steuerbüro. We are competing with Excel and this paper, saving some trees in Germany, and basically hoping to have Steuerberater, the tax advisors, as one of the distribution channels in the future as the system gets a bit more traction.
Well, we actually have 2 questions on YouTube, but they are not directed at Munit. So maybe I'll just wait before I present them.
I think with respect to time, Franz, maybe we just do this offline, take those questions offline to the startups and they can answer.
They have already answered. I'll just read them. Just the one question to Moonfair was, so you don't charge any incentive fee. Besides that, would you name yourself a feeder fund? And Stefan Pauls has answered no incentive fees at all, totally independent from the GPs, the funds. And then there's a question from Manuel Born. Just a question, is there a sustainable or impact fintech presenting today? This question comes a little late, but that gives me the chance to tell you that this live event will be archived on YouTube and can be looked at later on as well. So this should answer the question too. So if there are no more questions, maybe it's time to say thank you very much. This was a lot of information to process. Thank you for the enlightening presentations and the very lively discussion with the jury. So what are the next steps? The jury will sift through the applications, all the applications, and will compile a short list that will form the basis for the final session sometime within the next few weeks. The awards ceremony will be held in September in Stuttgart. And until then, we'll be active on social media, on the usual platforms. You find all the information down below. And we'll keep you posted about the progress of the process there. But obviously, the winners will only be announced at the Fintech Germany Awards ceremony in September. So thank you from my side, and closing remarks from Michael.
I actually need to add that the very next step is going to be the publication of the shortlist. I think you didn't mention that, so that's the very next step. So please look out on social media for the shortlist, and out of that, then the winner will be announced on stage, hopefully on stage in Stuttgart. We hope for an event with 200 plus people, and all this would not be possible, of course, with our sponsors. So big thank you to our sponsors again, which are, as you can see, Bankhaus Metzler, Areal Bank, Allianz, EY, Helpling Business Advisors, Fred Executive Search, Linklaters, Studio Polylog, who helps us with our website greatly, Stuttgart Financial, obviously in Stuttgart, and Tech Quartier, the host of the day. Again, a big hand and big thank you to the team in Frankfurt that made this happen and possible. And a huge hand even to our jury, who now has the massive amount of work. impressions today from 10 startups and another 100 and I don't know how many, almost 200 that are participating to look at in the next few weeks and come to a conclusion and a decision. Not an easy task. I'm very much looking forward to the cooperation and the interaction with all of you. And Franz, closing remarks from your end.
No, there's just thank you, and yes, I'm looking forward to working with the jury again. It's always a pleasure. Thank you very much.
Stay safe.